Hello from Otet Markets. This is Ahura, and we'll be with you with the global economic outlook in the week ahead, the last week of March and the first quarter. Before starting the new week, let's first have a short review about the previous week, and then we can check the week ahead. As you know, the previous week, all the focuses were on central banks meetings. In Sweden, we had the 25 basis point rate cut. In Brazil, we had 1% point totally full 1% point of rate hike because of higher inflation. In other economies, including United States, UK, Japan, Russia, and also China, we didn't have any changes in the interest rate. In United States, we know the Federal Reserve held the rates between 4.25 and 4.50%, as widely expected because of increasing worries and concerns about the increasing of inflation, and also the central bank is trying to wait and see what's going to be the market reaction to the new administration's policies. In United Kingdom, BOE held the rates at 4.5% as the new government's policies, especially the social policies, can create the inflation, can increase the inflation. That's why the central bank decided to hold and see. We know that for the new budget, the government made the promise to have a less the social budget, so which means that it's going to be the new budget can be less inflationary. That's why we expect the central bank to cut their rates in its next meeting. We're going to see that, check the data that we will have from United Kingdom the week ahead as well. In Japan, while they held their rates at 0.50%, there are too many signs about the rate hike in next meeting. And in China, holding the rates at 3.1% and 3.6% for 1 and 5 years loan prime rates, made the central bank to decide and promise to lower the RRR, the reserve ratio percentage, to support the economy. And also, sorry, also we now also about the other economies. If you want to talk about the other economies, we can say generally the central banks, they are mostly are waiting on the wait and see position to see what's going to happen, especially with the trade war and overall condition that is going on in the economies. It was the most about the last week, but we know that the last week we had too many geopolitical tensions about the ongoing. We know that Mr. Putin and Mr. Trump, they had a conversation about the peace talk in Ukraine, and also we know that that President Trump increased its treatments against Iran and its affect the oil and energy market. Let's go ahead and check what we can expect from the markets. In the week ahead, Monday gonna be the day of PMIs, Purchasing Manager Indexes, for both service and manufacturing sectors. We're gonna have the primary numbers for the March. Generally, we expect to have a little bit better than previous months. To have the numbers better than the previous months and see a little bit re-increasement in manufacturing and service sectors activities for most economies. But these positive data wouldn't be that much positive to change the market general the condition. But right, but it's going to be some positive data in the markets. Tuesday, well, we're going to have very important data from United States. In Germany also, we're going to have the IFO surveys from the current and expected from the current economic condition, and also expectations for next 6 months. We are expecting to see a little bit positive data here and see that the people in Germany after the previous election, they have a little bit more, they get a little bit more optimistic about the economic condition. In United States, also I have to mention that in all days in the week ahead, we're going to have the speeches from the central bank's members in United States, United Kingdom, and across the board. They're going to be very important because previous week, as mentioned, we had the central bank's meetings, and this is speeches from the Fed members, from the policy members in United Kingdom and other countries. These speeches will give us more bright, I mean, they will bring more brightness about what's happening in a meeting and what we should expect from these banks in their next meetings. So on Monday, Tuesday, Wednesday, all the days of the week ahead, we're going to have these speeches and they will be very, very important. Tuesday in United States, we're going to have besides the speeches, we're going to have the housing data numbers and retail sales, especially the retail sales of the Red Book Index. The Red Book Index is supposed to show some increase in retail sales, especially as mentioned earlier, also in the previous weeks as well, that what we had in the last in January, in January usually and generally we expect to see slower retail sales because after that November and December increase in the retail sales, in January usually we can see the slower retail sales and the slower I mean personal spending as well. But these numbers gonna be for the February, and we can expect slightly increasing this in the data. And later in United States, we're gonna have the new home sales. The new home sales expected to increase again, because the mortgage rates already fell again under 7%, and these can I mean these expect I mean these what happened there in lowering the mortgage rate again can support the retail, it can support the house new home sales as well. It can support not just the new home sale, it can support the pending home sales numbers that we're going to have on Wednesday. Generally, the housing market supposed to show some activities and better, we can say that a bit, I mean, a bit better performance. On Wednesday, as mentioned in United States, we're gonna have this on Thursday. Actually, the pending homes is gonna be on Thursday. Sorry, I told on Wednesday. It's gonna be on Thursday, but on Wednesday from United States, let's continue with the United States. In United States, we're gonna have very important other data, which is the durable goods orders. Durable goods orders with the lower sales, it's expected to fall by 0.1, 0.7% to from 0.7 to 1%, the headline orders, but orders without excluding the defense and excluding the transportation, supposed to have slight increasement, but headline durable goods orders supposed to fell by 0.7% or until 1% in February. That's at the beginning, I told the previous week we had so many, besides in central banks meeting, we had too many other economic data as well. But the data that we had generally the previous week on the view and the first look, it was positive somehow. But if you go further, checking the underlying factors such as LEI, such as durable goods orders, you can see some weakness in economic activities. And that's one of them. That's one of them, this durable goods orders, which can hold the concerns over the economic growth in the United States. On Wednesday, we will have inflation and also especially the retail sales, inflation and retail sales numbers from United Kingdom. We will probably see lower inflation and also slowing retail sales as well, which both of them means that the economic activity will be under pressure while the inflation is softening a little bit. That generally can cause that generally can cause the central bank to lower its interest rate for next meeting, which is going to be on May. So generally, the picture, economic activities expectations, and also the slower inflation expectations can support the idea of lowering interest rate in May meeting for BOE, which means 25 basis point rates cut to 4.25 percent will be very likely. Later on Thursday gonna be the Thursday and Friday most probably will be the US day. On Thursday, we will have GDP for quarter four. The last, I mean, it's going to be the last numbers and the final number of the GDP. We expect to see the GDP to increase by 2.3% in fourth quarter, while the personal inflation also supposed to increase by 2.4%. And pending home sales, as mentioned earlier, supposed to show some slight improvement after previous months' fall. But most important data will be on Friday. Let's continue with United States, and then I will go back to the United Kingdom and Japan as well. In United States, we're gonna have the consumer price index or consumer personal income and spending data, which is the main data in the economic calendar in the week ahead. We are expecting to see the personal inflation, the core and headline inflation to increase by 0.3%, and which means the annual inflation also for both core PC price index and PC price index supposed to stay unchanged at 2.6 and 2.5%, but generally they can be they can confirm the sticky inflation, and which means they are positive for the US dollar, especially we can see, especially the numbers of personal income and spending also can support that, because the income expecting to increase again by 0.4% the previous month because of non-adjustments. But I mean, the general income increased by 0.9% and 0.4% this month can support that, can bring the idea of more income and available. The people have more income, they can increase the demand and they can spend more, while we can see that the personal spending can increase by 0.6%. So when you have more income and more spending, the more, especially by 0.9% income in January, we can say that the personal spending can increase again in the next months, and with higher demand in the market, we can say that inflation will be more sticky. So generally, this is what's going to happen in United States. So which that number can be positive. I mean, the sticky inflation could be positive for US dollar and negative for stock market, as it can confirm the Federal Reserve will continue the rate cut a little bit later, and they will hold these current rates for longer. But besides the United States, we will have the more important data in United Kingdom as well, especially with the retail sales and also GDP. The GDP and retail sales expected to fall, as mentioned earlier, but the GDP is supposed to increase slightly, very slightly, by 0.1% in the fourth quarter, and that's generally the data from the United Kingdom we're going to have this week. They will be very weak data. They are not going to be any supportive data for British pound or British stock markets. But in Japan, in Tokyo, we're going to have the Tokyo inflation on Friday. We expect to see the inflation again to be sticky around 2.9% for headline inflation, and core inflation to be sticky around 2.2%. Again, that can support the idea of rate hike by central bank, by Japanese central bank or BOJ in its next meeting. Sorry. These data are the most important data to watch in the economic calendar. And let's check the charts. Let's check the charts now and see what we can expect from the charts, considering the mentioned data that we talked about. US dollar index, with these data, we can expect the US dollar to get more demand, because currently we know the geopolitical tension is still high. We know that the inflation expected to show this sticky condition. Generally, the data that we have, especially from the housing market, we expect to see a little bit of increasement in the housing data. So these data can generally support the idea of holding the current rate for longer. But these expectations can put the US dollar index in the demand. But as mentioned, during this week, we're going to have more speeches from the central bank's policy members, especially Federal Reserve Fed members, FOMC members. The US dollar mostly will react to these speeches because they're gonna tell us what's happening in the market in the meeting and what we can expect from the Federal Reserve in their next meeting. So that's why you should follow we should follow these speeches during the week more closely. But generally, after touching 103 here, we can expect US dollar index to re-increase or at least to have a slight movement with the bullish tendency in the week ahead. But on the other hand, for the gold, we expect to see some correction after touching the new historical high. We expect to see the gold to have some correction towards 2,960, and after 2,960 we can say, okay, now it's the time for the gold to think for its next movement. But generally the gold right now in a correction movement, and we can expect some correction towards 2,960, especially with the stronger expectations for US dollar index. We can make more we can with more confidence we can expect the gold to fall further. About the oil depends on geopolitical tensions and economic growth. In the recent days, we know that, especially in the previous week, while the OPEC Plus, they decided to increase the output from the April, but at the same time, the new sanctions against Iranian oil especially from the United States side, and pressures on the Iranian oil market and sales, we had lower output generally in the market. So with the current demand, that support the oil price to slightly increase. But this increase was not so strong because the economic activities, they were not so bright. So we didn't expect too much increasement in the demand. That's why the oil prices were mostly, we had mostly side movement in the previous week, slightly increased, which wouldn't be, so much optimistic. We can say that it can continue further, but generally the market still will be around 70. The market will be around $70, $1 or $2 up or down, but generally the market is positive. So, the side movement with the positive expectation, that's what we can expect from the market. So the oil market is somehow the side movement with the positive expectations in one side, but the geopolitical tensions and economic activities, they will be main market driver. But generally about the oil market, we can say that the $70 plus minus $1 would be the more acceptable price for the market right now. Not the investor and not the sellers. They are not expecting any special and any big changes around these numbers. We talk about the oil and the stock markets. I have to mention about the stock markets with the ongoing inflationary concern in the market in one hand, and also the economic activities which can confirm the higher for longer could be expected policy for the Federal Reserve. For now, we can expect to say that after 2 or 3 weeks side movement in the downtrend in the stock market, we can expect one more week about the side movement, but this correction wouldn't be more than 5,800. It means the stock S&P 500 could increase towards these levels, 50% of its Fibonacci level around 5,800, and after that we can expect some correction. The correction could be maximum go towards this area, and we can expect the correction to be ended. But generally, in the bigger picture, the stock markets in Wall Street still under pressure, and we can say that generally the downtrend is not over yet. So with the overall downtrend expectations, we can see some correction maximum towards 5,800, but generally the stock market, they're going to continue their downtrend. On the cryptocurrency market, it's almost the same as the stock markets with the correction that we had in the previous days. in the previous weeks, but still the general trend is a downtrend, but this downtrend had very important and had very strong support at 80,000. If the price can hold above $80,000, Bitcoin price can go further and increase more. But falling under 80,000 can increase the scares on the market of scare of the falling further, can increase the fears of selling of the sales fearing the fear sorry the words came into another way on the mind. It will increase the fear of the more selling in the market, and the fear of more selling can put the pressures can put the prices under pressure and go deeper towards deeper digits or digit numbers, deep numbers. But generally, for now, as long as the Bitcoin trading above $80,000, we can say that the general market is bullish and uptrend. So $80,000 could be very, very important level for Bitcoin at the current condition. Yeah, this is generally what's happening in the market in the previous week and what we can expect from the week ahead. If you had any other question, try to write down in the comment section. I will try to come back to you and answer your question as soon as I can. Have a good time and week ahead. Bye-bye.